Okay, penny stock billionaires of the world. Penny stock, as Karl Marx said, penny stock billionaires of the world unite. So today, very interesting day in the markets. I kind of want to start off with NASDAQ over here. The big NASDAQ indexes, and then we're going to dive in. I hope you can all hear me. Just want to check if the sound is working. Sometimes I never know with these mics. Let me just check actually. Yes, looks like it's working. Okay. So here is the deal. Here's what's going on. NASDAQ. Let me just clear this up because this is actually pretty important. This is pretty important stuff here. I talked about this last, was it November December 2019. Excuse me, not 20. December 2020. December 2020. Right before we went into the big melt up of early 21. I said, hey, the markets, they're getting pretty expensive here. It's getting pretty expensive, and it's definitely going to crash at some point. There's going to be huge money to be made when these things just get destroyed and on the way up. That is, that's when the real money is made. Corey, thank you. So the real money is made in markets. It's all about price. I mean, the only thing that really matters is price, right? Like, look, it's like if something is cheap enough, at some point it bounces back. And I think this is something that we're going to see in the next couple of months. I was expecting it to happen earlier, but hey, sometimes they're off by a couple of months. What can I tell you? So here we come. Now this chart is actually going to be pretty scary because, back in December of 2020, I was saying, hey, this could get quite ugly. Then there's going to be a big upside. And you know what? I tell you, to me, it feels really just like 2008. Just like 2008. Here we go. Here is a chart. What time period is this? This is basically the summer of 2008. Summer of 2008. I can remember it like it was yesterday. So so how did that market start out? So basically, we came into the year. It was a pretty kind of interesting time period because there's so many things. There's a lot of similarities because I remember the summer of 07, stocks people thought they were going to collapse. Everybody thought, oh, this is going to be like, 1987, like the 7 years always, it's always kind of like it was at the 20th anniversary. Yeah. So it's like, it's at the anniversary of the 1987 market crash, stuff like that. So people were kind of freaked out. So the market sold off in August, right? You can really see it was really accelerating, like it was going to collapse, and then it bounced back. And, it was almost like nothing ever happened, right? Things were going up. And by the way, the housing market, the whole, the mortgage bullshit, it was all kind of starting to crack in late around this time, late 07. But anyway, the market, made a new high into November 07. It dropped, and I remember, here we go. And then we go to December, we break below the moving average, and pretty much the year opens up right below. It just starts going all the way down, just like collapsing pretty much, right? Then you had the Bear Stearns collapsed. That was pretty bad, right? And then all of a sudden, March 08, things start going back like, hey, it's going to be, good times are here again. The spring was, it's a bit of a roller coaster, right? Then we get into August. And, look, the summer is always a little bit quiet, right? People are on vacation, but, they think, okay, we're at a double bottom here, right? It looks like a double bottom, all right? Triple, head and shoulder, inverse, inverse. I mean, that's what it looks like on this chart, right? We're below the moving average, right? But then here's what happens. Let's move the chart a little bit further out. Oh, there we go. So all of a sudden we get into September. Everybody comes back, back to school, September. And the Lehman meltdown starts happening. And as the kids say, shit gets real, right? This is what happens. All it really just kind of waterfall. It was a complete meltdown. But again, here's the thing you got to realize: what's going on here, right? We're below that 50-day moving average trend line, which is key thing I always tell everybody to look at. 50-day moving average. You want to be long above it, short below it. Sure enough, yeah. So it goes down, breaks below, and obviously the low. It got even worse. It got even worse by March. Once Obama came into office, it was kind of a panic that, okay, this guy's going to be a Marxist or whatever, and so the market really collapsed, and that was the bottom right here, 1260. It was like 1266, I believe. Yeah, on the Nasdaq. So yeah, it was, but basically things really started accelerating, and that brings us to today. So it's interesting because look, we've been talking about stocks here. Wow, what a long journey, right? So we've been talking about stocks bottoming out, some moon stocks. We talk about DraftKings, Palantir, AMC, TDOC, Teladoc, ARK, Tesla, right? So look, you got to go again. 50-day moving average, that tells you where the trend is, right? We want to be following the trend. The trend is your friend. And we broke out above that 50-day moving average in a bunch of these stocks over the last couple of weeks, all right? So look at, hey, is this the bottom? You really don't know, unless you go in hindsight, obviously. But once a stock is in that above that moving average, that means the trend is up. That's the bottom line. It's not the chart stuff is all very subjective. I say it's a double bottom, and the guy says, well, no, it's this, it's that. But nobody can argue with the moving average. Nobody can argue with price action. That is purely mathematics, right? So here's what's going on. It's interesting. With that long preamble out of the way, let's go into what's going on with NASDAQ. So, again, very similar to the 2008 period, right? We come out, we open up the year heading down. I mean, it's like 2000. I mean, like, come on. I just showed you this, rewind on the video, right? We go straight down the chute, right? Right down the chute. Get a bit of a bounce in March. Wow, interesting, right? Just like 2008, I think so. Back then we had the Bear Stearns, which, by the way, the Bear Stearns going bust was a big deal, right? Bear Stearns is like, people don't even remember that name. Bear Stearns is a legendary trading firm. That was like one of the big. I mean, they were like the equivalent of. I don't know who's today. Like, who is it today? I wouldn't even know, but it was like, I mean, we're talking about in the league of like a Goldman Sachs, basically, like sort of like a more aggressive version of Goldman Sachs, right? It was more traders, there was a much more aggressive firm, right? Smaller firm. Yeah, so people forgot all about it, right? But again, and just like in 2008, you had the Bear Stearns thing that was in March, and this year you had obviously the Russia invasion of Ukraine right in that period, which led things to collapse. And then, of course, we bounce back, and then the market keeps selling off. But here's what happens. Notice every time the market breaks below, the Nasdaq breaks below the 50-day moving average, it really goes down a lot. It goes down a lot. And then we have a couple of these fake outs where it broke out above the 50 moving average, but it only goes up, it only has a short pop. Like we had it back in December, right? We had it in December. Maybe you could say back in October last year was a bit of a pop. Again, December. But again, the gains are very, very small compared to the downdraft. So on the breakout, very small gains compared to what goes on where, okay, so, you break out and it gains from, what is it? 15,650 to, 1,600. Okay, 400 points. And when it breaks from 15.6 to, 30, so the downdrafts are like 4 or 5 times bigger, right? Again, you have a breakout here, March, you have this nice little breakout, and, it looks like, hey, This is it. We had the correction is done. We're going back up. Look what happens. We have a little breakout, and it's a fake out. It's a rug pull, right? Here's what happens with the moving average. One of the big challenges is that you do have some of these whipsaws in the market where it's able to capture big trends, big moves, but you can also get whipsawed to death. I mean, you can really get whipsawed to death in some smaller, when you have a bunch of stuff happening. So you get whipsawed over here, right? And it drops, but if you went short, you would have captured this gain. Then you had a breakout. It looks like a breakout, back July 15th, Nasdaq breaks. It looks like it's breaking out, and no, here we go again. We're now approaching we're approaching that 50-day moving average again. It looks like it's breaking down. So this looks pretty ugly. And again, very similar to the 2008 charts. It's incredible. It's eerie. I mean, this thing just wants to go lower. You can see it wants to go lower, right? So what does this mean for, what does it mean for our favorite penny stocks, the 10x to 100x stocks? I'll talk about that in a second. Before I go into our favorite stocks, let's kind of talk about some of the disruptive innovators. Let's go into ARK, for example. So ARK is back again. We're back breaking. It's ready to break below the moving average. How bad can it get? I don't know. It's kind of interesting. In theory, it looked like we had a bottom here, right? It looked like we had a bottom. It could have been a inverse head and shoulders bottom. That's kind of what it looked like. And could we make new lows? Is it possible? I remember talking about this as a potential for let's see, what could be the potential low. By the way, that trend line on the bottom, I don't know what that's from. I mean, I just, it's hard to imagine, ARK going below like that 35 level. It's really hard to imagine. Very hard to imagine, but can it happen? I mean, shit, it could. Anything is possible. I don't see it going that much lower though. If it breaks 35, I mean, where is it going to go? I don't think. So the downside, I think, is getting limited. I think we've taken out a lot of the hot air from a lot of these stocks. I think we've taken out a lot of that hot air. Let's take a look. For example, let's look at TDoc. So Teladoc, one of the bellwethers, health tech space. It was $300 back February 01, and now we're we dropped almost 90%. 90%, 90, right? The stock went to $27. So we dropped 90%. We broke out above the moving average, right? So technically, this is your buy indicator. July 5th is your buy indicator. And, we've been above that moving average. So in theory, it should be an uptrend. I'm getting concerned that it might have been a fake out because look what's happened. I mean, we're in a bear market because, the trend, the overall trend, obviously, look, the trend is down, but the breakouts from the moving average are very small gains, and the downdrafts are so much bigger. I mean, the breakout is tiny. It's like, June 21, gains a couple points, and when it breaks, it drops like 3 times that. Again, here, October, it gains a couple points, and when it drops, it goes from 134 to 69. So 70, yeah, huge. So it's classic bear market, right? The question is, how much lower is there to go on a stock like a TDoc? I don't know. I mean, could it drop to, we're going into kind of, I don't know, uncharted territory here. Could it drop to historic lows? I mean, what's the all-time low? I mean, this stock has been as low as $10, right? Can it drop to $10? I don't know. I just don't see that. I mean, it's hard to imagine that happening. It's hard to imagine that type of thing happening. Let me just clear this. Draw clear. What's going? My chart is all screwed up now. I don't know. This is Yahoo. I like, for some reason I like the way these Yahoo charts look, but then something happens with them and they're screwed up. But I mean, I don't know. Look, I think the support in TDOC is still kind of in this 30 range. You got a decent amount of support in that range. I wouldn't be buying it here though, even though we're above the moving average. It just looks like the other shoe is about to drop. First we had the compression in the moving in the multiples, right? The multiple compression, price to sales, price to earnings. The multiples are getting compressed, right? So the valuations are dropping, and now you have bad earnings. You have Walmart, and everybody's coming out with there's different excuses why their earnings is going to be down, right? So this, but look, the market is forward looking. These charts, they're forward looking. It doesn't matter what the fundamentals. I mean, the chart could be telling you potentially, I don't know, a nuclear war or something, right? Like, we don't know what the thing is going to be, but the charts are looking really ugly. How about this? How about DraftKings? Here's DraftKings. This is so DraftKings, broke out above the moving average. I bought it because I think, hey, sports betting is here to stay. It's a mega trend, right? There's no arguing with sports betting being like, a mega trend, just like, I don't know, e-commerce was in the year, 1999 or something, right? It's a mega trend. It's going to be a big new market opening up. We're starting to see big numbers. And there's a lot of exciting things in that market, right? This is one of the leaders in the space. But here we are. We pop out at $14, and now we're breaking below the moving average. I mean, in theory, I should be selling here, right? In theory, I should be selling here, taking a loss here. I don't know, but how much lower can this thing go? That's the thing. You got to be disciplined with these moving averages, but it's kind of hard because there's so many of these whipsaws. I don't see this going below $10. I mean, it could drop to $10, very possible. Maybe a little bit lower, but then we might build a base for months. But ultimately, right now, it does look like it's going to continue going lower because we're below the moving average. So everything I said in the videos last week, whatever it is, it's out the window because we're trend followers here, and the trend just changed. Sorry to tell you. So we're not the crystal ball readers here. How about AMC, right? AMC, same thing. I mean, it had such beautiful momentum last week. I mean, incredible momentum. And then the 22nd starts pulling back, and now we're like the gravity is just wants to pull this thing back below. The thing is this though, I have no faith in the fundamentals of AMC. I mean, I love the way this chart looked over here with a breakout. On the 21st, it was accelerating. That momentum was just accelerating, like a moon rocket taking off to Planet 100 bagger, like a moon rocket going to Planet 100 bagger, and all of a sudden the moon rocket is going up, and then it becomes like a Tesla, like a Elon Musk rocket, where it does the thing where it comes back to Earth. What is it called? It makes a landing. That stage, the booster stage, can land. It's pretty crazy. I actually saw this happening. About 6 months ago, I think one of these rockets that they launched from Florida. I mean, like it's like I'm watching. It's amazing. It's just like you can see this, I guess, from 100 miles. I don't know if it's possible, but yeah, this rocket just comes back down. I mean, I just saw the flame. I didn't see the actual piece, but this is what's going on. This moon rocket is going down. I got to tell you something. At this, like with this AMC, this is a stock. You don't want to be long this stock when it's below that moving average, because this is really the fundamentals of this are like, basically not very good. It's not very good. How about Palantir? Palantir still above the moving average, losing momentum. Again, Palantir is a little more of a legitimate company. It's a question of what it's worth, right? This has been the big question. What is this thing worth? I think we might break below this moving average and go to new lows. Could it go to $4, $6? It's possible. I mean, $4 or $5. I wouldn't rule it out. I mean, that would be pretty crazy if Palantir goes to $4. I mean, that'd be like pretty interesting. I do think it's possible. I really would not. I would say it's like a 50-50 shot at this point of this thing going to $4, maybe bottoming out there. How about what else are we looking at? Let's take a look at. Okay, I'll pull up Mullen just for shits and giggles. Yes, this thing is. We talked about this before. It wasn't able to hold on to the moving average. This thing wants to go down pretty hard. It's like the Titanic. It's going down. Bellwether, Tesla's losing momentum also. You had this beautiful breakout, July 15th. Actually, no, right? Yeah, but over here, look at this. Momentum, July 21st, momentum accelerating, like it's accelerating. And then you had a couple of these, losing momentum. It's starting to fall. And I think we're going to break down below this moving average. Although, look, the trend before that, the trend technically was heading up, right? You had higher lows in these cases from this wedge happening over here. In theory, this should have been a legitimate breakout. We're going to find out. It's hard to tell right now with what's going on with Tesla. All right, so let's go to our moon stocks. Which is our favorite penny stocks. Nextech, NEXCF. Okay, what's going on with the chart? Interesting. Look at this. So, it's kind of a bell. It's an early indicator for the market, right? So the stock broke out of this 50-day moving average. And by the way, when Nextech breaks out of the moving average, it has massive moves, these massive gains. I mean, look at this. Historically, it's made massive gains every time it broke out of that 50. That's why you want to watch that 50-day moving average. But look what's happening right now. It lost some momentum once it got to $1.30, sold off, profit taking. It's been trying to make a bottom for the last couple of days, right? We're trying to make a bottom here now. You got support in the 75-cent range. There's a lot of support in the 75, 80-cent range. We got to see what happens if it's going to maintain that support line, right? 75 cent, even 70 cent. That's your key support. I have, again, so this is a client company, so I'm biased, obviously. I'm biased. It's like, it's hard for me to be objective. Straight up, it's very difficult for me to be objective with a client company, especially when a chart is, it could go either way, right? It's not like it's not black and white at this point. It could go, it's kind of in this no man's land where it could, shoot up, continue the uptrend. It could go back to the support line over here. I have a feeling though that we did see the lows in Nextech. There's a lot of catalysts right now. So right now the bias is still to the upside, right? We're still above the moving average. The trend is still up here. But we're going to see if we can maintain that support level. That is going to be very important to watch. A couple of other moon stocks we haven't talked about in a while. Nuran, great news today, $100 million contract in Africa. Now, $100 million, but it's over 10 years, so it's still nothing to laugh at. $10 million a year plus. And these contracts are just adding up. So these guys are executing. They're doing what they said they would do. Things are definitely taking longer than we would expect. What else is new? That's no big surprise in the world of microcaps. Not a surprise at all. And they're doing business in Africa. That's their whole business is based in Africa. Does anything happen on time in Africa? They got real infrastructure problems, by the way, because what do these guys do? They put it in the telecom antennas, basically, in these remote rural areas. I mean, that's not an easy business. I think one of their things that they have to ship an antenna to, where do they have to go? Somewhere in Africa, and there's no roads there, so they have to go on a barge on a, what's the lake? Was it is it in Kenya? It was a lake, but they had to go and barge down a river. It takes 2 weeks, for this, that, you got a lot of stuff, a lot of, a lot of stuff they got to deal with, right? So, but that also makes this thing potentially very valuable because, once you're in there, you got a franchise. It becomes extremely valuable. It's a monopoly. It's a moat. It's a real moat with alligators, Nile alligators. So we're above the moving average now. Technically, you have a buy indicator on big volume, so that is a positive for New Rand. So it's a positive right now. Let's see if the stock really needs to break out above this dollar range for it to be considered an uptrend. It needs to break out of this for a confirmation of uptrend. We're going to know in the next couple of days, basically, right? So that's what's going on over there. What else is going? It's otherwise. Look, the markets are rough right now. It's like it's hard to get momentum in these markets. AIML, we're at the moving average. Oof, closing below it again. Yeah, this thing is like it keeps flirting with that moving average line, that 50-day moving average line. So it's really, really annoying. They got a lot of catalysts, and amazingly, this company, the market cap is $5 million. What do? They're in the health tech wearable space. We talked about the patents. We talked about all that stuff. Here's the crazy thing. The health tech space, right? The health tech space got a massive validation from Amazon last week, right? With the acquisition of One Medical, ONEM, right? $3.5 billion, I believe. So Amazon is getting into the healthcare space, right? I would think at some point, again, I'm not saying they're going to be buying AIML. That's not. But the point is, it's telling you that the market, that there is, that these, if Amazon is making a move in the healthcare space, and that people were expecting that type of thing to happen last year, right? This is going to bring a lot of attention to this area once the market stabilizes. I think once the market stabilizes, people are going to realize that this health tech space is really kind of where it's at. And, I'm looking at AIML kind of from two angles. One is I like the chart. I would want to see it above that moving average still, but technically we're in a double bottom. And by the way, about my theory of stocks, stocks like to return to old highs, which we've seen happen time and again. So you have a couple of potentials here, right? We're at 15 cents right now. AIML was $1.50 in January of 21. So you're getting the stock here 90% off. It's 90% off, just like Teladoc. Teladoc is 90% off. AIML is 90% off. So basically, you're getting this thing at, you're buying this thing at 10 cents on the dollar. It gets better. Where does this chart? Oh, here. Wait. Yeah. This chart again. This goes back to previous thing, whatever. But technically, this vehicle has traded at $9.50 in the past. This is what the chart says. Right? I'm not making this up. This vehicle, right, was $9.50. That was 10 years ago, but I like that actually. This reminds me of CBDT at a nickel. CBDT was a high flyer when we introduced it at a nickel. So, I have a feeling like over here, you got a really good risk reward setup. That's the way I'm looking at this thing, right? And we can go at the fundamentals, watch the videos for all that stuff. I'm just talking purely in terms of sentiment, investor psychology. 90% on sale, just like Teladoc. Penny stocks have a lot more torque. And I think the health tech space will come back. Oh, I'm sorry. Let me give you the big, okay. There's your big chart. You know what? Gold is going lower. Gold is going lower. Yeah, I think the gold chart is not looking good. It is not looking good. I think we'll probably see $1,400 gold. I mean, just like 2008, gold collapsed. Gold collapsed. Anyway, yeah, gold is not behaving the way it's supposed to behave in crisis anymore for whatever reason. Let's take a look at, okay, so I give you the AIML. Here's an interesting one. This is up on strength today. Paid XTM. We had the CEO on a while back. I highly recommend you watch that interview with Marilyn. We're below that moving average line, but it looks like it wants to go up. Potentially, we have an inverse head and shoulders pattern happening here. We'll see if it breaks out. It's got to go to what is the number here? 20 cents. No, it's got to go to like, now I would say, I'll tell you what, if it goes to, it's got to break out above 22 cents, 23 cents to be considered, potentially the new uptrend. But something is happening here. And by the way, ironically, I think they're in a very good space from a fundamental standpoint because their whole business, it's a fintech company basically helping restaurant service employees get their tips, get their wages same day, which is a big deal today, right? So it's an app that lets them get, cash, their tips, everything same day. So, which is, most of their income comes from tips, right? Now imagine, you live in, I don't know, LA, right? You have to drive to work. You got to drive 30 miles to go to that job, where you can make the big tips. Hello, right? That's why you're going to be driving, 30 miles or even 50 miles. If you know that you can make, I don't know, let's say $300 or $400 that day in tips, right? So, but the thing is, you got to get that money, right? Because let's say you have a family, right? Let's say you're a single mom in, I don't know, you're in, I don't know, what's outside of LA? What's, I don't know, some shithole city outside of LA that's 50 miles away. And you want to go to, your job in a restaurant in, I don't know, Beverly Hills, Santa Monica, Westwood, whatever it is, right? Malibu, where you're going to be making those $400 in tips, right? The problem is you got to drive there, right? The gas prices are through the roof, right? Might be costing you. You got 3 kids, you got rent, you got to feed these kids, you got to buy them clothes, you got to pay for the car, you got gas. And listen, these people aren't driving Teslas, right? You're driving a car that even if they get 20 miles a gallon, right, it adds up. It's expensive. So they need cash that day. That's what XTM does. It's an app that lets you get paid same day, your wages, your tips, all that stuff. So it's very important in today's market. So these guys are actually in the right place at the right time. Right place, right time. I would almost say, again, it's completely, I'm using the wrong metaphor. And again, I hate this. I don't think the company would like me using this metaphor, but it's almost like one of these, like in a bad economy, which businesses do well? Pawn shops, check cashing places, which help people stay liquid, right? It's not everybody's making $10 million a year or whatever it is, right? It's sometimes you need you got to get that money the same day, and these guys help make it happen in a very fair way for the people using it, the app, the employees, the companies. It's a win-win situation. So these guys are really doing, I think they're really doing a wonderful, providing a wonderful service for a lot of people. And as a result, I think they should do well as a result of that long term. But again, these guys, right place, right time. Let's see what happens, though. It's got to break out above, let's call it the 22, 25 cent range. What else? Otherwise, the market is really like, it's really ugly right now. Let's take a look at Bitcoin. I haven't even looked at Bitcoin in quite a while. Yeah, it's amazing because Bitcoin has held on. It's amazing that Bitcoin has held on as well as it has. It really is. But here we go. We're breaking below that moving average again. You got that rug pull fake out. You had this breakout on July 19th above that moving average. And it looked like it could have been really good, right? But again, if you guys saw, I think I put on our Telegram, I said, hey, this pattern looks very, very similar to what we saw over here in March of this year, right? It looks like a bottom, like kind of this head and shoulders, double, whatever you want to call it. You have a little pop and then it breaks down. And I think this is going to be the big gap. It's been holding on this 20,000 range, or this 20,000. It's been kind of that line in the sand. And if we really go below it again, this time, if it happens again now, it's going to be, it's going to be pretty much all over, right? These things are not linear. This is the crazy thing. This is, the whole idea of the markets is to make things as frustrating as possible for investors. If it was easy, everybody would be a billionaire, right? I mean, it's not. It's always, the market, it doesn't repeat it, but it rhymes, right? It's not, you don't get the same thing. It rhymes. So you got to kind of go with it, right? So it's not an exact pattern, but I'll tell you, I got a feeling that once we break on Bitcoin, once we go below this 20,000, that's, the thing that's been missing that everybody's been talking about is capitulation. Everybody's been saying, hey, there has not been capitulation yet, because you still have retail investors still buying stocks on the dip. They're still buying. You still have people talking about Bitcoin. And no bear market has ever ended out of boredom or whatever. Bear markets only end when you have just complete capitulation, or everybody throws in the towel and just says, look, I had enough. Just get me out. Give me my money. I never want to look at another stock again. That's when you have the bottom. So that was March of 09. March of 09. Even though, October of 08, things look really ugly. You had capitulation, but then you had another capitulation. That was a unique example. I don't know. But look, it's been, here's the other thing you got to look at. We have not had a real crash since then. What happened in 2000 with the Corona crash, that wasn't even, that was like a short-term thing. That was like I know a lot of people panicked, but that was, that kind of resolved itself pretty quickly. I think, the Fed stepped in. At this point, I think these guys, they can't do anything. Their hands are tied. That's the problem. They're kind of backed into a corner. What are they going to do? They're going to cut interest rates? I don't know. AMC to the moon. They really are in a bad spot at this point. So we might, so the capitulation has not happened. And I'll tell you when the capitulation is going to happen. The capitulation is going to happen when AMC, breaks below this, the moving average over here, this over here, which is right around 14. Let's say AMC breaks below the, I think it would need to break below the $10 range. I think once below, I think ultimately AMC will be back at like $2. I think we'll be back at $2. Capitulation in AMC is going to be at $2. So, Jorge, $2 is going to be, I think, a good time to actually buy AMC again. I think at that point, there might be a value. I don't know. It might be a value at that point. I don't know about their financials. But it could be. I'm not giving any advice here. So what else? What other stock do we have moving? So that's the one thing. We haven't had capitulation. And on Bitcoin, we really need to see capitulation. Bitcoin, I think Bitcoin could be the, look, Bitcoin, and this is, I talked about this back in, November 2020. I said, look, Bitcoin is going to be that's the systemic risk out there that's going to bring the markets down. Just like, the house, just like the mortgages, the bad mortgages, the subprime mortgages brought down the market in 2008. I think Bitcoin is, it's kind of a systemic risk. And interesting. I mean, I forgot to mention the best part of all this. I started off talking about, the 2008 crash and what happened with. Oh, was my mic not working? Okay, in case you missed it. All right, in case my mic was out. Basically, I was saying that did you miss it or whatever? Anyway, I wasn't watching this thing. But anyway, yeah, so it's very possible that the crypto thing is going to be that's going to be the black swan that takes down the markets. Just like the subprime mortgages were in 2008. Like you had the Celsius breaking down, you had these other mortgage firms, these other crypto trading firms going bust. Creating that systemic risk in the market, which is it's kind of spreading like a cancer throughout that system, right? Um, there's a lot of like regular normal people who have their money tied up in some of these crypto firms like the Celsiuses and these others. So that could be, all those things add up. All those things, they compound, they accumulate, they compound. And it's sort of like, hitting a pinata, right? You keep hitting the pinata, you keep hitting it, and finally it breaks open, right? So the same thing here. I mean, like the markets keep getting hit and hit and hit with all these little things. And at some point, there's going to be one of these things is just going to be too much. And, I don't think that there's not going to be candy coming out. It's going to be something else. It's going to be, it's going to be a lot of ugliness in the markets. So it could be very well that we're looking right now at a, August 2008, July 2008 scenario all over. Like it very well is possible that we might see the markets really, this decline could really accelerate into September, and it could really turn very ugly. With that said, though, a lot of these stocks are pretty much near lows. I don't know if they're going to go too much lower. Like our penny stocks, like the AIMLs of the world, the Nextex, DraftKings, TDoc, even ARK. I mean, how much lower are they going to go? Like, we're not. It's not going to go to zero from where it is now. ARK is not going to go to zero. Can it go to 25? Yeah, it could. 35? Yeah, it could. It could. 35 easily. 25 possibly. So yeah, you got things are things are looking ugly. And there's your, there you go. There's your gold. I mean, this is like, what is this, a double top? We're below the moving average. I mean, this gold, in theory, there's some support here at 1700. Could be, this could be bouncing off the support, could be. Small possibility, but you really got to pay attention to this moving average, and it's pointing down. We're moving away from it. Trend is accelerating. I mean, I don't know. Why can't the gold drop to 1200? I don't know. Why not? Why should it have to be here? Why can't it go to 1200? I think it will go to 1200. I think it's going to go to 1200. And then, could make a new high to 3,000 or whatever it is. But look, it keeps making higher highs, right? Every couple of years. So it's very possible it goes to 1,200. And then we go to, 3,000. So anyway, on that note, thank you all for joining. I will see you on the next live stream. Stay, and as they say, stay liquid. Stay liquid. This is what matters right now. You need to have cash on hand, dry powder for some massive opportunities. They're going to be in the back half of this, right? At some point in October, when there is capitulation, we're going to see massive opportunities to steal stocks. I mean, literally, it's going to be like scooping up things like on the cheap. And I'm talking about like, there's going to be some great opportunities to get in on financings and private placements, and get loaded up with like really juicy deals, pre-IPO opportunities. I mean, the big money is made when the market is ugliest. Look, Facebook, all those things. I mean, Twitter, the seeds of all those companies were planted in 2008. 2008 is when people got in at very cheap valuations into a lot of these deals, and they made 50 times their money, 100 times their money. And I hope to share a couple of those opportunities with all of you in the coming weeks, the coming months. It's going to be a couple months. By the way, speaking of opportunities, here I have on my desk is a draft. This is still a draft form of soon to be a bestseller, my guide to making millions of penny stocks. Insider secrets of making huge money with penny stocks. It's probably going to, I think it's probably going to be like about 180 pages, but a quick read, a fast read. Because I know none of you have attention spans, but it covers everything. It covers everything you need to know to get rich, to make millions with penny stocks. We talk about everything. We talk about the complete criteria for finding the next super stocks which have a 10x upside, explaining how stock promotion really works, what you need to watch out for, how to avoid scams, technical analysis, explain the main things, 60-second due diligence, how to size up a stock in 60 seconds, avoid all the bullshit, and know in 60 seconds or less if this thing is going to be a winner or not. How to analyze, on page, what do we got? 80 or something. CEOs, this is big thing. CEOs are big part of it. Quality of CEOs, how to, analyze the quality of these CEOs. Are you dealing with somebody who's a winner, or are they a deadbeat, right? Are they a champion, or are they a deadbeat? This is what this book talks about. It talks about money management strategies, which we haven't really talked about in the live streams, right? What else? All sorts of brilliant insights. I mean, this is going to be, it's probably going to go right to the New York Times bestseller list. If you want an advanced copy, drop me a DM. Should be ready in the next few weeks. We'll have, then we go off to publishers, and, you'll all be able to buy it. All right. And then, some of you will be writing in testimonial letters saying, hey, I made, $20 million. I turned $10,000 into $20 million. Can it be done? In this book, I show you how it could have been done. $10,000 and 20 million. I know it sounds crazy, but you could have made that with some of our penny stocks not too long ago. And those times are going to be back. These things are cyclical, and there's going to be massive opportunities in the next 6 months. You got to be prepared. Now is the time to prepare. Look, luck is preparation meeting opportunity. Preparation meets opportunity. You got to be prepared, so when the opportunities present themselves in the next few months, so you can make a 50x, 100x. I mean, I think we're going to have 100 baggers. I think the seeds of the 100 baggers are being planted right now. So anyway, that note, see you all on the next